What's good, YouTube? It's your boy, Charles Enoch. Y'all already know it's another episode of Invest in Myself. So run the intro. So I have a scenario in which we will be paying off a high interest credit card. Now this scenario, unlike previous scenarios in the past that I have explained, you will be paying credit card interest. So we'll start like always with Velocity Banking by turning that credit card into our bank account. And by doing this increases our cash flow because the credit card isn't an expense anymore. But with interest being charged every month, we have to figure out what the true cash flow is. Now this sounds complicated, but trust me, it isn't. So you already know I got the whiteboard in the back, but before we get to it, yes, I'm gonna ask you, destroy the like button for me, make that thing turn blue. And if you are new to the channel, take a little bit of time, hit that subscribe button for me. I really do appreciate the people that take time to do both. It does help me reach a higher audience base. All right, enough talking. Let's get to the whiteboard, crunch these numbers. Let's go. All right, so we at the whiteboard. So you know we're gonna get straight down to business here. So we have an individual, their income's gonna be about $5,000 per month that they receive. Their expenses are gonna be $4,645. Part of the expenses is the rent, so that's included. The rent's gonna be $1,865. This leaves them with a cash flow of $355. Now, this individual does have two credit cards they need to pay off. We're going to be focused on credit card number one. Now, NF is his Navy Federal credit card. So this is the one that we're going to be focused on because it has the highest interest. Now, the individual has $14,800 that they need to pay off. And they have a limit of $17,000 that they can charge onto the credit card. Now, the interest on that credit card is 15.49%. Now, they have another credit card, PL, it's the Platinum Visa card, and they have $17,000 on that Platinum Visa card. Now, again, we're going to be focused on the Navy Federal card, but I just wanted to put this in there because it's going to be part of the equation here. Now, the minimum payment for the Navy Federal card is going to be $250 per month. The Platinum card, the minimum is $354 per month. Now, if for scenario one, if the individual just paid the minimum payment, and remember that the minimum payment, it goes lower and lower every time you pay it off. So even though it's starting at $250, once they do that payment, it may be $249, $248. So if we did method number one by just paying the minimum, which I suggest nobody ever does, it would be 557 months before they pay that card off. Now, option number two, let's say that they paid $355 monthly, pretty much the cash flow onto that credit card, the extra that they have, it'll take 61 months. Now, option number three, this is the one that we're going to be doing. Let's say that we pay $648.52 every single month onto that credit card. We will pay it off in 28 months. So I know option three doesn't make sense, but we're going to make it make sense here. All right, so we're on the other side of the board with the method. So let's make option number three. Let's see how that's broken down. So number one, we're going to pay our rent, which is $1,865, and we're going to pay our Platinum credit card, which is $354 in cash. That's going to total $2,219. So we're going to pay that in cash, the rent, write a check or whatever you do with your landlord. And then we're going to use the cash to put into the Platinum credit card. Now, the leftover money, step two, we're going to put the rest of our income onto the Navy Federal card. Now, the balance on that credit card will be $12,019, because remember, the balance was $14,800. So now we're going to go to step 3. We're going to pay all other expenses with the Navy Federal credit card. Now, one thing with the Navy Federal credit card, it does give you 2% back on all items. So we're actually building an extra cash flow. And this is why Velocity Banking is just a tad bit better, instead of just putting all the money, all your extra cash flow onto the card, because you're creating cash flow by using the card. So since we get 2% cash back, then our expenses, the rest of our expenses are $2,176. We times that by 2% equals $43.52 of extra cash flow that we're going to be getting back on our card. So you put $2,781, and that's part of your income, onto the credit card. Now, $2,176 went out of the credit card to pay for the expenses. This equals a cash flow of $605. Now you have to add the $43.52 from your cash back. So once we add the $43.52, we get a cash flow of $648.52. Just by using our card, again, we have racked up $43.52 that we can apply more towards the card. So step 4, the balance on your Navy Federal credit card will be $14,151.48, because remember, we had to pay our expenses. Now, step 5, we have to calculate the simple interest that has been charged, so we know the true cash flow, because we know our cash flow before any interest is $648.52, but what is the true cash flow? So the equation for simple interest, we're going to take the balance, the $14,151.48, we're going to times that by 0.1549. That's 15.49%. And we're going to divide that by 12, pretty much 12 months in a year. This is going to equal $182.67 that it would be charged for interest. So the total balance after the interest has been charged on the credit card is $14,334.15. So when we look at the true cash flow, we're going to take our cash flow of $648.52. We're going to minus that by $182.67. Remember, that is the interest that is being charged per that month. And our true cash flow is $465.86. So that is what was applied towards the card. Now remember, with the Velocity Banking, since we are using the card and it's a rewards card, we are getting an extra 2%, our $43.52 that we're putting onto the card. This is what makes us pay it off faster than just normally putting the minimum and the cash flow on there. Because the minimum and the cash flow is only $605. We're putting in $648.52. So Velocity Banking is going to speed it up more. Now, a couple things to note with the simple interest. Every single month, the true cash flow is going to go up because there's going to be less on the card. So this is always going to rise. So your cash flow isn't just $465.86 the whole 28 months. It's going to rise more and more and more and more until you pay that off. So again, this is a method of how to pay a credit card off, by making it and turning it into your bank account, putting all your money in there minus the expenses that you have to pay in cash, and then using your credit card to pay the other expenses that can be used for a credit card, getting the rewards points and putting that back into your credit card. So I know you guys have asked me, hey, can you do a scenario where you're paying off the credit card using Velocity Banking and you're not able to pay the full statement balance or the card off with all your income? So this would be an example here. So hopefully this makes sense, where you want to use that rewards card to actually get the rewards and put it back onto the credit card to pay it off even quicker. So just a little light work, nothing too complicated, but hopefully this does help anybody that's trying to pay off that hefty credit card with a hefty interest rate, and for some reason they're not able to do a balance transfer where it will be the 0% for 18 months or any type of thing because maybe their credit is low. This would be an example of how to do Velocity Banking where you can't get a line of credit to pay it off or anything of that nature. So if this was helpful, definitely remember to smash the like button for me. And if you're new to the channel, go ahead, hit that subscription button for me. It does help me out and it does help the channel reach a higher audience base. And like usual, you guys have a good weekend. Peace out.